10,610 ATMs and cash recycling machines at September 30th, 2025. Moving on to loan growth. The domestic loan portfolio grew by 10.6% year-on-year at September 30th, 2025. The retail loan portfolio grew by 6.6% year-on-year. Including non-fund outstanding, the retail loan portfolio was 42.9% of total portfolio. The mortgage portfolio grew by 9.9% year-on-year. The credit card portfolio grew by 6.4% year-on-year. The business banking portfolio grew by 24.8% year-on-year. Growth in domestic corporate portfolio was 3.5% year-on-year at September 30th, 2025. 73.2% of our corporate loan portfolio was rated A- and above as at September 30th, 2025. Moving to asset quality, our net NPA ratio was 0.39% at September 30th, 2025, compared to 0.41% at June 30th, 2025. During Q2 2026, there were net additions to gross NPAs of 1,386 crore rupees. Gross NPA additions were 5,034 crore rupees in Q2 2026. Recoveries and upgrades of NPAs, excluding write-offs and sale, were 3,648 crore rupees in Q2 2026. Gross NPAs written off were 2,263 crore rupees in Q2 2026. There was a sale of NPAs of 6 crore rupees, mainly for cash, in the current quarter. Our provision coverage ratio on non-performing loans was 75% at September 30th, 2025. Total fund-based outstanding to all borrowers under resolution as per various extent regulations declined to 1,624 crore rupees, or 0.1% of total advances at September 30th, 2025, from 1,788 crore rupees at June 30th, 2025. Loans and non-fund-based outstanding to performing corporate borrowers rated BB and below were 3,661 crore rupees at September 30th, 2025, compared to 2,995 crore rupees at June 30th, 2025. The increase during the quarter was due to upgrade of certain borrowers having non-fund outstanding from non-performing to performing status. The total provisions during Q2 2026 were 914 crore rupees, or about 5.4% of core operating profits, and about 0.26% of average advances. The bank continues to hold contingency provisions of 13,100 crore rupees at June 30th, 2025. Going forward, we will continue to operate within our strategic framework while focusing on micro markets and ecosystems. The principles of fair to customer, fair to bank, one team, and return of capital will continue to guide our operations. We focus on building a culture where every employee of the bank serves customers with humility and upholds the values of brand ICICI. We aim to be the trusted financial service provider of choice for our customers and deliver sustainable returns to our shareholders. With this, I conclude my opening remarks, and I'll be happy to take on your questions.
Thank you very much, sir. We will now begin the Q&A session with Mr. Batra and Mr. Banerjee. Anyone who wishes to ask a question may press star and one on the telephone. If you wish to remove yourself from the question queue, you may press star and two. Today's announcement is on the bank's financial performance. Hence, we would like to request you to ask questions related to that. Please write to the corporate communications team separately for any other queries. Due to time constraints, I request all of you to ask 2 questions at a time. If you have additional queries, you may join the queue again if time permits. Thank you. We'll take our first question from Vishwanath Nair from NDTV Profit. Please go ahead.
Hi, Mr. Batra. Just a quick question as to why the net interest margin number was not there in your press release, because I was just wondering, it's 4.32%, right? If I'm not wrong, that's the number you disclosed.
4.3%, Vishwanath. I think we have disclosed that number.
No, it's not there in the press release. That's why.
Yeah, it should be there, but anyway, I can point out to you separately.
Sure, that's fine.
If you want to go, I mean, it's in the P&L. It's bullet number 3.
Okay, understood. I just want to get. Sure. I just wanted to get a sense from you about the 10.3% total advances growth that you're seeing. Firstly, is this slow compared to what you want? Is this something that you want to accelerate further? Because in general, there is this understanding that there is a massive rate cut that is flowing through the system right now. You should be able to grow faster on the advances side.
No, you are right. We have been very happy with the growth. Given growth has to be seen in the context of an economic environment, and we focus on overall profitable growth. Our domestic loan growth has been about 3.3% sequentially and about 10.6% year on year. That's what you really talked about. It has picked up, and within that framework, you see, the business banking continues to do well. It has grown 24% year on year. Our retail portfolio has grown by 6.6%, and it is the corporate portfolio, as I did mention, was growing at a slightly lower rate. As you rightly said, given all the policy measures, both from a fiscal and a monetary perspective, which have happened during the course year, we do expect the second half to be better. There has been a GST rate cut, which all of us are familiar with, and we do hope the second half during the course of the year should reflect a better loan growth. As I mentioned, we have. You will see that we have reported the loan growth numbers of other participants as well, and we really remain positive on the overall loan growth going forward.
Okay. And one point about the general announcement around increasing bank exposure to large corporates. That's something that the RBI is easing up on as a system, not specific to individual entities, as well as acquisition finance. I wanted to get a sense because you're the premier sort of corporate project financial lender in the market. So would that be something of interest? Is that something that you're looking to grow into further?
No, these are important announcements. These are enablers which the regulator has done, and they should be structurally positive. Of course, we wait the final guidelines to come out on this subject. And as with every credit, we assess the opportunities and the risk and return framework. And if they fall within that, we would be happy to increase our book with right counterparties.
Thank you.
Thank you. Next question is from Ankur Mishra from ET Now Swadesh. Please go ahead.
Right. Thank you so much for the opportunity. I want to understand from you regarding the next levers of the growth. You mentioned that retail is slow this quarter as bank would have liked. So will the mix change in the coming quarters? I want to know from you because right now your corporate is growing better, but retail is at least lesser than the aspiration. So can we see that mix changing?
See, Ankur, for us, we really look at the cash flows, what's happening in the economy, and we are sort of a follower in that space. And our loan growth has been largely in line with what the system has been growing. And if you see even the various components of it, if business banking is an area where the economic activity is more and it is bankable and falls within our risk thresholds, it continues to grow. The retail, there was a bit of a slowdown, as you had seen, and as I talked about, given all the policy measures which both the Government of India as well as Reserve Bank of India has taken over the last couple of quarters, you are seeing some kind of a. In fact, the retail book has grown quarter on quarter, even during this quarter, and a year-on-year growth is about 6.6%. As I did mention, we do expect that the second half retail growth should improve. The business banking growth continues to have a good momentum, and I do expect that to grow. Domestic corporate, I think as you are aware, domestic corporates have got enough cash and have got many other venues to access credit. We will look at opportunities wherever we are, which falls within both the risk and the pricing framework, and wherever it makes economic sense, we do it. We follow a fairly disciplined approach in our credit and look at the overall 360-degree relationships. That's a strategy that we have been pursuing for quite some time, and we will continue to remain focused on that.
Right. On the margins front, you have stood at 4.3%. Do you think this will be sustainable with a scenario where one more rate cut is widely expected?
We will see how it goes. I think NIM is likely to remain range bound with some benefits expected because of further CRR cuts and repricing of deposits. And also, there are competitive pressures, there is monetary policy, and lots of things do impact NIM trajectory. So we will see how it goes. From our perspective, we look at the overall profits from a relationship. So it's not only about the NIMs. We look at fees, we look at expenses, and the probable credit cost in terms of a product structure. So, a short answer on NIM is we do expect it to be range bound, and of course, if there is a rate cut, there will be some nominal impact which will happen on the NIMs as well.
Right. One last question before I let you go. Although the September quarter will not capture all the impact of the announcement which has been made, especially on GST, how are you seeing the situation on ground?
To the next question.
Thank you. Next question is from...
Hello, thank you for this opportunity. I have two questions. So one is related to the ECL framework. Would like to understand that how do you prepare? What is the impact you envisage in terms of provisioning requirement going forward, and the impact on your capital, and whether you have set aside any provision during this quarter towards this contingency provision you already have. This is number one. Number two is what is the size of your microfinance book, and whether you expect any improvement, or have you seen any improvement in the asset quality in this microfinance sector? Thank you.
So
Microfinance.
Okay. The second question is an easier one. I think our microfinance exposure is less than 0.5%. It is pretty small in the overall scheme of things. Coming on to ECL, while RBI has given its draft ECL directive, but with RBI we have been working for quite some time in preparing our accounts based on ECL. While we will await for the final guidelines to come, we are quite prepared for this transition whenever it happens. Of course, the way accounting happens will of course change. I mean, there is various stages from stage 1, stage 2, stage 3, as you are all familiar with, as opposed to NPAs being recognized on a DPD basis. We don't think these measures will materially impact our profit or capital at this point of time. So, of course, we await. This is all subject to the final guidelines coming from RBI.
Okay, thank you. And in terms of your microfinance book, how do you see the asset quality moving?
So this microfinance book for us was fairly decent. We never really had any material issue even earlier. We try to be pretty careful about the counterparties that we select. I do believe that the microfinance sector is improving in general, which should have a positive impact.
Okay, thank you so much.
Thank you. Next question is from Priyasmita Datta from The Informist. Please go ahead.
Hi, sir. So since you mentioned, actually you touched upon both the points about net interest margin compression from RBI rate cut and the impact on ECL norms, I just wanted to quickly follow up that we've seen only 4 basis points of compression on the margin from the expected 50 bps transmission that was expected in the June quarter. So I just wanted an estimate on further how do you see your net interest margin in the next quarter, and on the ECL norms, if you have any ballpark figure on what kind of impact it will have on your capital adequacy ratio and on your PCR. If you could just quantify both. Thank you.
No, as Priya, I just on the NIM part of it, as I did mention, we do expect NIM to be remain range bound with some benefit expected around the CRR and repricing of term deposits. Of course, it will also get impacted by, competitive intensity, monetary policy. If there are further rate cuts, that could impact it. But largely, we do expect in the near term to remain range bound. And on your second questions around ECL, based on our current estimates, we do not see any material impact either on capital or on profitability. So, of course, as I said, we will wait for the final guidelines of RBI to come and make a final assessment at that point of time.
Thank you. Next question is from Ashish Agashe from PTI. Please go ahead.
Sir, good evening. Hope I'm audible.
Yes, please go ahead.
Yeah. Sir, you spoke about the retail credit growth and how the second half promises to be better. But sir, what really sort of restricted the loan growth in the first half, of particularly in this quarter, sir? Was it sort of deferring of some decisions on say vehicle buys or something pending the GST cuts, or how was it? And secondly, sir, the 9% mortgage growth, how much of it would be between LAP and housing loans, the way we classically know it, sir?
Well, I think during the current quarter, our domestic loan growth, the retail loan our overall loan growth has been about 10.6%. And as I did explain to you, our retail book has grown by about 6.6% year on year and 2.6% for the current quarter. Within that, year-on-year growth has been in mortgages. Our vehicle loans grew by about 2%, and credit cards grew by about 8.4%, and personal loans by 1.4%. So from our point of view, we look at the customer 360. It's not only about the loan portfolio, and wherever we see appropriate risk and reward measures, we try to drive the overall 360 relationships. If you see, the system has been growing probably at a similar kind of a range. We do believe we are growing slightly better than the system. But our approach has been try to look at don't look at loan in isolation. We have to look at the NIMs, we have to look at the fees and the probable credit loss, and try to make a 360 assessment so that we can serve the customer probably in a much better fashion. So that continues to be our strategy, and that's what we have been doing. The reason I talked about the loan growth, of course, there was a bit of a slowdown till the GST revised rate cut, which got implemented from 22nd of September. There has been a very strong momentum, which was probably just reflected in just about a week during the current quarter. We do expect this momentum to continue. And if the economic momentum continues, it will obviously show in our loan growth and overall quality of book that we build.
Okay, sir. And a small question, sir. The business banking segment has grown handsome growth at about 25%. For one, do you expect the same to continue going ahead as well? And so there have been some sort of voices of concern on the small business exposures, especially in this sort of environment. You are saying that for you, as of now, it is holding up. But what sort of outlook do you have from that perspective as well, specific to small business exposures?
If you see, small business exposure has been doing well. I think there has been a lot of formalization which is happening in the sector, especially with the introduction of GST and bureaus looking at this. That has enabled us to capture that market. So there has been a lot of movement from an informal sector to the formal sector here, and this sector is increasingly becoming bankable. So there is a structural shift which has happened in this sector. We expect the momentum to continue. From our perspective, we look at return of capital principle, and wherever we are able to see that is an area that we focus on. For us, it is about providing 360 degrees coverage to the sector. Tech enabled, as you are aware, we have an industry leading app called InstaBiz, which we focus on it. We use a lot of data analytics, including the use of GSTs and bureaus and whatever data, and that gives comfort. And if you see that in that sense, that in a way gets reflected in the overall NPA. The numbers in this sector too are holding up pretty well. So as long as we are happy with the